So we're coming off a big week for gold and silver, and there's just so much going on with those price charts, you can just get sucked in, focusing only on the big numbers and ignoring everything else. We're going to try to fix that last part. Okay, so in this one, we're going to be talking about gold, of course. Maybe some silver as well, but I'm going to point out a few unrelated bits of information about the metals that on their own might not seem as interesting as the current spike in prices, but it changes when we put them together. Things like sales tax on gold and silver, capital gains taxes, deficit spending, gold buyer demographics, maybe a few other things that maybe deserve their own videos, maybe not. But when we put these together, the whole picture gets a lot more interesting, maybe even a little bit more alarming than just, hey, look what the prices are doing. Before we get back to it, if you're looking for gold and silver, hit up SD Bullion. New customers can even get gold and silver for spot. That's sdbullion.com/new. So let's start out with the U.S. federal budget deficit. In 2023, so last year, the United States ran a federal deficit of $1.7 trillion. And that $1.7 trillion is 6.3% of the gross domestic product here in the United States. And it's the highest it's been since the 2008 global financial crash. Now, I don't get political here, but a deficit of 6.3% of GDP is obscene. Something you'd only expect to see when a government is fighting a significant recession, and that is not the case. The U.S. government was not fighting a recession in 2023, at least not one that we know of. Now, possibly more alarming than that, the $1.7 trillion annual budget deficit is actually forecast to continue increasing, to continue getting worse. So the Congressional Budget Office shows in its latest projections a rise to $2.6 trillion by 2034. Now, consider the specific case here at the moment where taxes were cut, spending has increased, and higher interest rates are adding to the burden of debt. Now, I'm not building this up to say the end is near, but the current U.S. debt is $34.5 trillion, and that's about $11 trillion higher than it was just a few years ago in March of 2020, and the trend line shows it getting worse. So, kind of a downer way to start a video. Let's just file that bit of information under does not scale, and we can come back to that. The next bit is about state and federal laws related to sales and income tax on gold and silver. Now, maybe you saw a piece on Kitco about Kentucky now becoming the 45th state to eliminate sales tax on gold and silver. Good work, Kentucky. But what about taxes if you sell? Well, Nebraska and Alabama just became the 12th and 13th states to eliminate income tax on gold and silver, meaning you no longer pay capital gains on them in the event you didn't lose them in a tragic boating accident. Now, at the federal level, this is a harder debate to win. Federal laws on gold and silver status as collectibles have not changed, but you might have seen that U.S. Representative Alex Mooney has added again, just reintroduced a bill to make certain precious metals tax neutral. And it's going to be a lot of work to get there, but just as an aside, some of the debate revolves around gold, silver, platinum, and palladium coins from the U.S. Mint being minted with a legal tender value, meaning it's going to be easier to get U.S. mint coins tax neutral. So it's one more reason to potentially hold coins minted by your home team. A third bit of unrelated information is a study from State Street comparing gold ownership between boomers and millennials. Sorry, Gen Xers, once again, we aren't distinct enough to be included in this study, but maybe you saw this stat that millennial portfolios hold gold allocations of 17%. So 70% of their portfolio is in gold versus boomers at 10%. Well, who knew millennials were such big gold bugs? That stat got quite a bit of airtime. I saw it pop up on CNBC and Yahoo Finance before seeing it get read back on YouTube. It's the kind of thing that will be just interesting enough to get referenced without much scrutiny, but I think we need to take a little bit of a closer look at the methodology here behind that study because it looked a little suspicious. Now, Gold ETF ran an online poll of 1,000 people who had $250,000 or more in investments. And of those who responded, 25% were millennials. So we're looking at 250 of the 72.24 million millennials here in the United States saying they have allocations of 17% gold in their portfolio. So tiny, tiny, tiny sample size and everyone ran with it, but we can scrutinize that particular study here without ignoring the fact that gold is no longer seen as a boomer rock or even a doomer rock. I can see my stats here on YouTube that 55% of viewers are younger than 45 years old. A third of them are younger than 35. So it's not just for us old guys. So all these news bits are unrelated, right? Well, consider the trend for gold and silver too, but silver's more of a commodity than a hedge. We already know what's happening at the highest levels of gold demand. The trend of Eastern countries buying gold at historic levels. I think I told you in the last one that central banks bought 34% of global gold production in 2023. China, they're specifically buying gold with reserve dollars, effectively converting their USD to gold. So add to that the trend for U.S. debt, a push to remove sales and income tax on gold and silver, and this trend of younger retail investors showing interest in precious metals. I think all of this is very important to look at. You can see what's happening with the metals simply by looking at the charts. Gold's up 33% since the rally kicked off in October. Silver just shot up this past week, and that puts it even higher. But it's hard to say whether buying this stuff makes sense without considering all of these other things. Now, I think when we put it all together, it shows that having some gold as a hedge makes a lot of sense today, and it's only going to make more sense in the future. And you can throw silver into that category as well if you want. Now, I can really only come up with one potential cause for a significant drop in gold price. I think that kind of drop would also affect silver, and that would be the U.S. selling down its own holdings. But that really has so many other potential negative implications that we're going to have to cover that in another video. So I thought I would close this video down with a few price forecasts from gold and silver analysts, the big bank analysts, and I was looking for a case for $50 silver or some updated price targets for gold, and I found a lot of the same old calls for moonshots, but then I ran across this updated target from economist Jim Rickards, and he says gold is going to hit 2,700 by 2026, and it seemed a little conservative until I reread that headline and registered the additional zero. Now, the rigorous analysis that he talks about considers how much gold would have to be valued at to cover the current money supply in a gold standard that would be set up similar to what we had between 1913 and 1946. And that's usually where these crazy numbers come from. What if we go back to a gold standard? What if we win the lottery? Well, personally, I'm trying to be realistic. I don't see any reason the U.S. would want to go back to the financial system of 100 years ago. But all of the other factors that I mentioned in this video do show solid fundamentals for continued growth. So maybe Jim's forecast for $27,000 an ounce gold will be right and I'll be wrong, but the idea of having a non-zero position in gold makes sense either way. So let's call it good there. Let us know what you think. Are you still buying gold into the price ramp? And how about silver? It's kind of exciting moves for this stuff. It took 11 years to get back to 3150. I'm a little curious where it goes from here, so let us know what you think. And then while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you want to hear more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.